Welcome back. You're watching Power Breakfast on CNBC TV 18. Now on Dalal Street yesterday, the bulls, they continued to gain lost ground. After a strong start, the Nifty faced resistance at around the 10,600 mark, but yet the index managed to end with gains of around 70 points. The Sensex as well rallied close to around 300 points, reclaiming the 35,000 mark. The Nifty Bank ended with gains of around 200 points, while the mid-cap party continued. We had a strong up move even in yesterday's trading session. Things looking positive this morning, and Sonia's with us to run us through all the cues early this morning. Hi Sonia, good morning.
Hi Nigel, good morning. Well, it seems like the festivities could continue because we've seen the markets recover quite a bit from the lows that they hit last week. A lot of traders believe that the worst of the market fall is at least behind us. We're seeing positive cues from across the globe. The Dow rallied almost 550 points yesterday. We had some good earnings from the likes of Goldman Sachs, Morgan Stanley, etc. Earnings beating street estimates, and that's what really boosted Wall Street. Even in our own markets, that big revenue beat from Infosys is something that will definitely boost sentiment, especially in the technology stocks. However, the only niggling worry continues to be crude. So yesterday, we saw Brent crude once again resurface above that $81.4 a barrel mark. Worries from Iran, from Saudi Arabia, political pressures on Saudi Arabia after the missing journalist, incremental news on the missing journalist, etc. All of that could put further pressure on crude, and we could perhaps that could be something that could weigh in on our own markets. Also, tomorrow is a holiday, so traders may be a bit cautious. But having said that, the sentiment is still positive. We did see buying from DIIs yesterday, about 1,059 odd crores, although FIs sold in trade yesterday.
Okay, Sonia, yes, markets looking in a festive mood, and you're definitely adding to the festive cheer, all dolled up. But what are the stocks you'll watch out for? You did mention Infosys and Hero MotoCorp. Yesterday, in fact, is a long day because you have Reliance Industries that comes out with numbers post-market hours, so we will be reacting to that on Friday. In terms of Reliance's numbers, it's more of the same, really. You have, the expectations are that the petchem business will continue to be quite strong, while refining business will be weak. Telecom business will continue to grow. We'll talk about that in greater detail, but that will be one stock in focus. Infosys reported a very strong revenue growth. It maintained its FY19 constant currency revenue growth at 6 to 8%. That's something the street will like. Hero MotoCorp reported numbers that were operationally weak, but it was in line with street estimates. In fact, absolutely in line at 15.1% margins, so no surprises either way. Strong earnings from Mahindra CIE, though. The revenues went up 22% at 650 odd crores, while the profits were up almost about 74 odd percent. So I expect that stock to be in the green today. Back to you.
Okay, all right. Thanks so much for that, Sonia. Well, on to the big earnings. Infosys reported its second quarter earnings. The company's revenue and net profit topped street estimates. However, it missed the mark on the margins front. Rima joins us with the key takeaways. Hi, Rima. Good morning. Run us through those details.
Well, yes, as you pointed out, there was a big beat on the company's revenue. So the company reported a dollar revenue growth of 3.2%. In constant currency terms, it was a growth of 4.2%, which is higher than what TCS had reported. But if you compare it on a year-on-year basis, TCS's double-digit growth is still higher than what Infi reported, but much higher than expectation. So that is the big thumbs up. On the flip side, the margins have come in lower than what the street was anticipating. The street thought that the company would benefit from that 4.5% rupee depreciation. That's not come through. Margins have been flat. And when you compare it to TCS, which reported a 150 basis points improvement, the flat performance of Infi's margins will definitely be disappointing. What the company said is that the INR depreciation boosted their margins by 80 basis points, and improvement in pricing also aided them by 70 basis points. But that was offset on account of a wage hike, steps taken by the company to arrest attrition, as well as higher subcontracting costs. And net-net, margins were flat versus expectations of an improvement of 60 to 70 basis points. Profits were in line with expectations of 14% improvement on a sequential basis. FY19 guidance maintained, so constant currency revenue guidance at 6 to 8%, margin guidance at 22 to 24%. You could be a bit disappointed on both fronts because on one hand, given the strong revenue performance in Q2 and the strong deal wins, the street was hoping that, you've set the base for a pretty strong growth for the full year, so why not raise the guidance? And even on the margin front, when you've got a rupee tailwind, why not up the margin guidance? However, that said, the deal wins were very heartening at an all-time high, crossing the $2 billion mark. Digital is looking good, 31% of the overall growth. The management commentary is upbeat on BFSI retail, indicating that the demand environment is stable. So net-net, beat on revenue, very strong deal wins, partly offset on account of the miss on margins. The stock was a bit under pressure yesterday, so I think there is a case for the stock to be mildly higher today. Let's listen in to the management.
We see a strong demand outlook. As I shared, we see good fundamentals in the US market. We see a good macro. We see strong macro in the continental European market. Our deal wins are strong in Q2, also strong in Q1. All in all, our view is that this is a fairly comfortable outlook in terms of demand and revenue growth for us. So we remain quite comfortable with where our revenue is looking today.
Rupee benefited us by about 80 basis points, and we also had a good pricing as well as some of the another 70 basis points came to us. But that entire 150, we invested about 100 basis points for new additional compensation and also to address certain pockets of attrition that we had. The currency movement is also another factor. How is it going to play out? It has been extremely volatile if you look at the last 1 week at least. So at this point in time, we are comfortable with the guidance, and we are pretty much, if you look at the first half of the year, pretty much at the top end of the guidance.
A kind of a mixed quarter with a margin mix, but a strong top-line growth. But another big number that was reported post-market yesterday was Hero MotoCorp, and Sonia is back with us to tell us the details. Sonia, the company reporting a tad bit better than the muted expectations. No surprises?
Well, no surprises actually. The operational performance was largely in line with expectations. It was a weak performance. The margins have actually fallen by almost 230 basis points year on year, but this was expected. Higher raw material costs, higher employee costs, and the higher tax rate because of the expiration benefits at the Haridwar plant has impacted the profitability, and the profits fell about 3.4%. Yes, on the revenue front, it was slightly better than what the street was estimating, but largely, the commentary from the management also continues to remain the same. They did mention at the conference call that yes, the start of the festive season has been weak. However, they hold on to their 8 to 10% growth guidance. They said that in this festive season itself, growth will be about 8 to 10 odd percent. Now, if you look at the gross margins for the company, they've gone up by about 70 basis points quarter on quarter. The realizations for the company have also picked up 2%. That's because they could manage to take a price hike. Their realizations came in at 42,600 rupees a unit. However, all of this was offset by the higher tax rate. So the tax rate has come in at 32.6% versus 29.6% on a year-on-year basis because of the expiration of the Haridwar tax benefits. All of that has put pressure on the margins. So margins are at the lowest level since Q4 of FY17. However, in the conference call, the management said that the macro story remains intact despite short-term headwinds. They will not push back any capex plans at the moment, and they don't foresee any demand problems in this festive season. Credit Suisse has maintained a neutral. They say that while the bulk of the vehicles are financed by NBFCs, Hero at the conference call says that they do not see that as a challenge to growth in the festive season or beyond. So they maintain neutral on the stock. In fact, let's listen in to what the management had to say at the call.
We do see while there's a bit of softening on demand side, it's more flattish than growth at this stage. But we do expect things to turn around and move forward. And we are expecting, like we've said earlier, still hopeful for an 8 to 10% growth in the festive season. This whole insurance thing obviously has created a bit of dampness. Like I said, the first few days have been flattish. And I think most of it is going to be kind of, sit back or some sort of shock, that preliminary shock that increased insurance did lead to. What I also mentioned that we'll continue to grow at a steady 8 to, still expect an 8 to 10% growth in the festive season. So we do not see a flattish festive season. We do see an improved festive season from here on.
The macro fundamentals of Indian economy in general and two-wheelers or auto sector in particular still remain intact. With Andhra, the capacity doesn't go up to 11 plus. It actually goes to 10 plus by end of next year. Although both these plants, which is Andhra and Gujarat, if need be, can be scaled up to actually move to 11. So therefore, that's the plan, and we feel that the plan is a very balanced plan in terms of the capacity expansion, and we don't see any need to push out the capex.
Okay, time to slip into a short break, but it's earnings season and Reliance is expected to deliver its Q2 numbers later today. We'll get you the key expectations. Stay with us.